So let's bring in our panel of experts that we bring in this time every month, and can promise some economist reaction too coming up from St George in about 10 minutes or so, when they delve through some of the numbers and offer some analysis to us. But I just want to repeat, 4.9% is our unemployment now, and that's surprised seeing a jump up in the Australian dollar. Let's bring in my panel with Simon Boulton with me from Aequalis in studio, and Fred van der Tang from Randstad. Good morning to both of you.
Morning.
I saw you. I think I heard you gasp there, Fred, as I did as I was saying it. 4.9%. You guys are always a bit ahead of the curve on this kind of thing, because you're seeing the pipeline long before they actually show up in ABS figures. What do you think of actually seeing 4.9% on the unemployment rate this morning?
I am genuinely surprised. I didn't see this one coming. Usually there's a little nuance, a decimal here and there, but this is a big drop. I think actually the play on the participation rate is probably a very important one, because that will have a significant impact. You know, we're talking to our clients, organizations across the country in many industries all the time, and we've seen that April was actually a relatively slow month in terms of hiring.
Okay.
Again, genuinely surprised. I hope it's going to be some good news in terms of confidence, because confidence is still probably too slow. We're going to have to see what the budget measures will mean in terms of effect as well. But it's probably not really reflective of what we've been seeing, to be brutally honest. To see the participation rate, Simon, drop back suggests that people are just dropping out of the job hunt, doesn't it?
Yeah, I think it's just showing that uncertainty. The part-time jobs increased. So there's just this 50-50, should we, shouldn't we sort of balance at the moment. So I think people are clearing the halfway house, creating part-time jobs. We've actually seen a little bit of certainly resilience in the temp job numbers. So, but these figures are just totally unexpected this morning. To have an unemployment figure less than 5%, compared on the global stage, it's just ridiculous. It's a crazy. Nobody would have expected this. And let's bear in mind, economists were probably expecting unemployment to get to 5.75% by the end of the year. So this is really against all of the forecasts, and I think what everyone was expecting to see.
I wonder why we're seeing that drop-off in the participation rate. I guess we'll kind of scratch our head, Fred, about that one. It's obviously a tight market, but with the uncertainties, does the uncertainty play into the participation rate?
I do think so. I mean, there's been lots of news in the media as well of the last weeks about what happens in terms of job ads numbers. Have they colored the picture in the wrong way, potentially? We've said that last time when we were in the panel as well. And I agree with Simon. I think many people are so uncertain that they either choose to not enter into the labour market or sit tight and don't move. We've actually seen some of the mobility stats that we research at Randstad quite regularly drop. So people are feeling more uncertain and try to stay where they are.
Let's bring in our other guests. We've got Cara Ordway, I think, joining us from the external camera we do from City Index. Cara, thanks for joining us. I imagine you might have heard gasps behind you as well as I did here in studio. To see 4.9%, what have you seen in terms of market reaction?
Yeah, exactly. It was a very big surprise, wasn't it? It was really the risk to the upside that many weren't expecting after a very bearish week for the Australian dollar and other risk currencies. So we've seen an initial jump in the Australian dollar. My guess is people will be looking to that 101.16 mark, which was the high from yesterday, possibly buying into that up until that mark. But certainly it leaves a lot of questions around what the RBA will do next now for traders after seeing that big cut in rates last month. A lot will be speculating on what will happen in the future. I think a lot of traders will be looking at that 15,000 jobs added as a very significant number, as usually over the past couple of months we have seen that figure be positive, then negative, then positive. So to have two positive in a row is fairly significant.
It would seem that it works, and I can see some reaction even across my Twitter and my wires. It would seem to work very much against another cut in June from the RBA.
Yeah, certainly. I mean, Credit Suisse have been pricing in 100 basis points over the next 12 months, and they did make that very bold statement last month with those 50 basis points. So maybe now what we'll see is this sit and wait scenario that we've seen in the past by the RBA, and possibly we'll have the Aussie, in pretty much of a stalemate where we see it range trading as we did before around that 103 level. So certainly it has thrown a spanner in the works. I wouldn't suggest though that the global economy would be able to keep it there if we do see any further woes in Europe.
Okay, so you think that trumps all in the end, probably, Europe?
Yeah,
Okay.
unfortunately so, yeah, I would say so. I think domestic data is important, but at the moment we're seeing so much concerns come out of the Eurozone. I mean, looking back to the past couple of months, the ultimate goal was to have Greece saved and to remain within the Eurozone, and now that is, you know, looking to be unwound, or the possibility of looking to be unwound. So that is a fairly big scenario for the Aussie dollar.
Cara Ordway, thank you very much. We'll let you get back to it.
Thanks, Brett.
From City Index. We've also got joining us Peter Gleeson, who's from Chandler McLeod, comes to us externally from the Melbourne camera today. Peter, sorry to bring you in so late. I can see you there now. 4.9%, an addition of 15,000 jobs. Are you as surprised as Simon and Fred here?
Yes, hi Brooke. Definitely surprised, but look, the reality is we've got to look at it in terms of, firstly, what it means around Australia, and we won't have those figures for probably 10 minutes or so, but the bottom line also is that that's pretty much wiped out 2/3 of the full-time increment increase last month, and we've had over 56,000 part-time jobs created in the last 2 months now, so the number of hours worked is up, so we actually need people doing jobs, but are they really the people that are going to get the longer term roles, or are they just filling holes? So I think that it is unusual that we've had so many jobs created. I think that traditionally April is a relatively slow month. There's a number of short weeks. It's coming up to the budget time in this, on this occasion, and also at the moment we are finding the participation rate, I think, is interesting because candidates are sitting on their hands. It's coming up to the end of the financial year. They want to find out whether they're going to get a bonus. They're basically sitting on that for the next probably 2 months, and I see this as a vagary. Basically, it's just up and down like a yo-yo, and I mean, I can't explain it, to be honest.
I don't think any of us can. It's not bad news, though, is it, that we're seeing part-time jobs? Because some people will just look at, you know, we've lost full-time jobs, we've gained part-time jobs. It's not necessarily a bad thing.
No, look, I think any job movement in a positive sense, in other words, in an overall increase sense, is great, but we're actually seeing some interesting dynamics in the marketplace now. I noticed you were talking about the WA budget a little while ago, and the short of it is that WA is incredibly skills short, salaries are going up, and believe it or not, on the East Coast we're finding some of the salaries going up as well as companies try and retain their critical employees. So, I mean, it's that return on investment that's going to cause the real crunch in the coming few months, because it's costing more to produce about the same and we can't get the right skill sets. So it augurs well for a fair bit of dynamics in the marketplace.
Yep.
I don't think it's going to be slow, put it that way.
Fred, in the budget we did see some efforts to address that skill shortage from the government, didn't we? Were they good enough?
Well, that remains to be seen. We welcome the fact that there's actually attention to the skill shortage and that they're going to make some more investments in terms of stimulating apprenticeships, etc. I think that's a really good idea. You know, if you look around the globe, a well-known example is Germany, who have had a long-standing tradition of building those apprenticeships and really investing heavily in especially technical and engineering skills, ones that we really badly need in Australia, certainly in Queensland and Western Australia and around the mining and resources sector. So I welcome the effort. There's also, I think, a specific effort on upskilling mature age workers, which is, I think, a good move, because longer term we do need that. You know, for sure over the next quarters we'll overcome all the uncertainty that's in the markets at the moment. And also, and it's partly related to skills, you know, further relaxation of the immigration rules is something we've been advocating for a while. Of course, it needs to be well organized, but again, it's, you know, like Peter said, there's still many organizations that are desperately searching for people that are just very hard to find, leading to, you know, it takes a long time to fill those skills, to fill those roles, meaning loss of productivity again. So we welcome the initiatives and hope they will come to some kind of fruition.
Simon, anything you can throw in at this point too?
Well, I think with that skill shortage, you know, immigrant workers or workers from overseas have always been a way that we've been able to fill that void. At the moment, there's a trend really to preventing those people, or making it more difficult for those people to come to the country. There are tax cuts to the living away from home allowances, and it's exorbitantly expensive here. So people coming from overseas are coming, you know, with the streets are paved in gold sort of view. They get here and see that to buy themselves a house for the family, it's just out of reach. So I think organisations are seeing us as being a very expensive place to employ people, and also workers are coming here and thinking, you know, my cost of living is going to be too high.
And if we're talking about bringing in, you know, top executives from overseas as well, there were some measures in the budget that you would think would be disincentive in that regard as well.
It's a real balancing act, Brooke. I think on the one hand you've got to be able to train people through the government schemes, through schooling. I think organisations probably need to be better incentivised to offer training internally. And I think there needs to be that balance of, you know, attracting skills from overseas in those areas that really are short of people. So getting all those levers going in the right direction at the same time is very difficult, to be fair, but at the same time I think it needs to be consistent And that's what we're seeing at the moment, is just a little bit of a lack of consistency in how those things are being managed.
Yeah, Fred?
I'm not afraid of seeing less entrance of executives or top-skilled people because of some of the tax measures. I think because at the end of the day it's about options. And like in Europe there's not many options, let's face it, certainly in traditional home countries like the UK for Australia. So I still think that Australia is, well, it's not exactly all gold of course, but it's still a pretty good place to come to. Costs are high, but I can tell you that salaries are pretty high compared to lots of other places as well. So I think on the balance it's still an attractive place for many people.
Just before we leave you two, and we can go back to Peter as well, I might ask the same question of Peter, but just considering how surprising these numbers are to you guys who are really at the coalface of the labour market, do you think there's a lot of noise in these numbers? I mean, to be seeing that and for all of you guys to be so surprised, I don't know, and just, you know, you were saying before, you're questioning we've been questioning some of the job ads numbers as well. What do you think?
I think it's always going to be a little bit fickle. You know, this is a long-term trend we're looking for. Job figures over the last 6 months, as the three of us know, have been up and down and inside out. So these surprises aren't new. I think we have to look at a more long-term trend, as Peter was saying as well. With these numbers, you know, one day's rise is going to be another day's fall. So I think it's just trying to get that long-term view.
Yeah, sure. Fred?
I agree. I think there's probably going to be a timing issue as well. April is a funny month with few working days relatively. The seasonal dynamics play a role as well. And again, like I said, now we've had the federal budget, and that's going to have an impact both on government jobs, for instance, which is going to have some kind of impact in the future as well. So I still have my eyes wide open for what the numbers next month will show.
Fred from Randstad, Simon from Aequalis, thank you so much to you two.